Hi, everyone. Welcome to the podcast. We have back again the only Mr. Bill Holter, who I affectionately dub as the Tom Homan of the financial industry. But he's also been a longtime friend and partner with the late great Jim Sinclair, who was dubbed as Mr. Gold, who has now passed that moniker posthumously over to Bill. And so he's going to be known affectionately as that going forward. And we're looking forward to getting all the questions answered that we have regarding the financial system, precious metals, and where he sees us in the near future accordingly. So if you are new to the podcast, as always, please do like, subscribe, and share so that helps the channel grow and others to gain in the knowledge you've been afforded. As you know, Bill is a stockbroker for over 23 years, and he's been working with Miles Franklin for several years as a clearinghouse for precious metals, and he handles clients of all different lifestyles, breadths, and depths. So you can certainly handle your needs adequately. And we are excited and honored, as always, to have the one and only Mr. Bill Holter join us once again. How are you doing today, good sir?
I'm good, John. Thank you.
Thanks for being here. We appreciate it as always. Bill, so first question out of the gate. Do you ever see a time to sell silver for some other asset class, or do you ever see yourself trading it, possibly some of it for real estate or another hard asset?
The answer is yes, but that is quite a ways down the road.
Okay.
Um, you need the debt bubble to completely pop. It needs to burst. There needs to be bankruptcies everywhere you look, blood in the streets, uh, and assets across the board are going to drop in value versus gold and silver. In other words, it'll take less gold ounces or less silver ounces to do the trade. So yeah, I could see it happening 2, 3, 5 years out where everything is collapsed. You've got silver, the masses don't have silver or gold. Um, and yeah, you'd be able to use that to acquire assets on the extreme cheap.
Yeah, it amazed me. Thank you, Bill. It amazed me to find as I was doing some research, and maybe you can clarify or confirm this, but I was always curious how many people currently in America estimated have actual physical precious metals. And I believe the number is a staggering like 9/10%. Does that sound about right to you?
Yeah, it's under 1% for sure.
Unbelievable. Well, we're going to do our best to try to get that up as much as we can for the masses, as
Well,
you know.
John, John,
Please.
what that somewhat means
Mhm.
uh, when everything does go south, if you own silver and gold, and I mean, you're not even have to have uh, huge quantities, but you'll more or less be considered a bank because there won't be any money on the streets. Money's going to get gobbled up, destroyed, whatever you want to call it, with a debt deflation. Debt is going to wipe out equity across the board.
Yeah, absolutely. Which is why we've encouraged our audience for years, Bill, in conjunction with your help, to become your own central bank. And obviously, precious metals is one great seminal way to achieve that. Um, the next question I have is it's kind of a protracted question, so bear with me for a minute. There are several theories as to why Fed Chair Powell has been slow on cutting interest rates. One possibility is the 10-year Treasury has remained strong and the Fed generally follows the bond market. Some think that Powell has aligned himself with US banks in order to kill the European banking system by purposely keeping our rates high for an extended period of time. Powell, as you know, is a Volcker advocate, doesn't want to cut the rates until he absolutely has to, which ensures he doesn't make the same mistake that previous Fed chairs have done by cutting rates too quickly and deeply. Or fourth, and I think most likely, is Powell wants to try to deny President Trump the rate cuts. He wants as a tactic because doing so may lay the blame squarely on the Fed when the economy tanks. What do you think is the ultimate reason for the delays?
It could be any that you mentioned. I mean, probably the most obvious one is the political aspect of it. Yeah, you're right. I don't think he wants to give Trump the rate cuts. The problem is the math. The math is the problem. I mean, you just look at we're spending well over $1 trillion a year now just in interest alone. And I saw a debt clock from 1990 where the total debt outstanding was 3 trillion. So in 35 years, we've gone from 3 trillion to 37 trillion. And now the interest is over a trillion. It's going to be probably $1.5 trillion this year, and maybe higher the following year. I mean, it's very possible that market rates, and we've already seen this, the Fed has cut rates 1 full percentage point last year, and interest rates on market prices of bonds rose 1 percentage point. So, I mean, that illustrates right there. It looks like the Fed is losing control of the yield curve, and that's a huge problem. I mean, they're at this point, they're damned if they do, damned if they don't. I mean, if they cut rates, then you're going to see the dollar tank, and you very well may see higher interest rates. You may see Treasury bonds sell off more and rates go higher. And if they don't cut rates, I mean, the markets are becoming more and more illiquid. If they don't cut rates, you may see a deflationary black smoking hole in balance sheets across the world with the central banks that hold dollars. So it's, like I said, they're damned if they do and they're damned if they don't. And at this point, because the math is so vast, I don't think it matters what the Fed does. It's going to be a disaster. Disaster is going to occur either way.
Yeah, I think you're right. I think President Trump has ostensibly boxed them into a corner where they, no matter what decision they make, it's going to undo the old system. And as you have said rightly many times, Bill, in many past conversations we've had, for us to bring the debt out of the picture, we'd have to revalue gold and silver into the 6-figure range, and that wouldn't happen because that would put it out of reach for most people. So we just have to default and reset. It's pretty clear at this point. It's becoming more so as we go along. Which brings me to my next question, Bill. I'm really curious. We've talked about this before, but we know that President Trump is going to force out Powell as part of the narrative, and they're going to bring in a new Fed/Treasury chair. Seems pretty good opportunity, or certainly a good possibility that Judy Shelton will get the nod. Do you think that's a good possibility as well?
Yeah, I think she's a possibility. I also think Scott Bessent, the current Treasury Secretary, is another possibility. But yeah, I'd like to see Judy Shelton in there. I'm really not sure why she would want to take the job, because where she's going is not fixable.
Well, the reason I don't know. I mean, that's a good question, but I would like her to be as well because I think she'll bring back the gold standard. He brought her in his first term to kind of do a litmus test in a swampy environment politically. He likes to hire women as executives. He's had a track record with that before. But that's a good question. What would be her motivation? I don't know. That's certainly. So the other question becomes: if he does pick Bessent, would Bessent be likely to return to a gold standard in as much as Judy Shelton would?
Yeah, I've listened to him speak over the years, and yeah, he understands gold. He understands hard money. He understands there's a huge problem. But like I said, I don't believe that it is fixable. And like when you said, 6-figure gold, that's not necessarily a fix for our system. Gold being brought on to central bank balance sheets, the reason they're doing that is to hedge against a collapsing dollar. 6-figure gold would ultimately or could ultimately fix the system, but the destruction of wealth, the destruction of lifestyles, the destruction of living standard, I think you would, I can't imagine how the public would react to that. I mean, I've said all along that I think that where they're bringing us is towards a disaster, and they ultimately want to bring the central bank digital currency. And the best way to do that is to tank the system and get the population to beg for it. Save us.
Well, I mean, the good news is, to your point, Bill, is whether he picks Shelton or Basent, we're going back to a gold standard to undo it. And as you've always said, gold is going to be the last man standing, silver, of course, as well. So as long as you're holding that, whatever they do, you have a way to wedge around it. But it is clear, to your point, that there's going to be a big disparity between the rich and the poor. And you're either going to be on the right side of history or the wrong side. And we're just trying to get, as you know, people to the right side of shores as quick as possible. And I'm glad you brought up the dollar, the failing dollar, because that was my next question. Our position, Bill, is that the dollar index, I looked at this morning, it was 96.47, so it's been precipitously dropping. It's going down, and falling interest rates could be a tailwind for gold and silver prices. We also see the passage of the big, beautiful bill as a tailwind with the trillions added to the deficit. What are your thoughts on all of that?
Let me comment on the big beautiful bill.
Sure.
It's going to add what, uh, 5 trillion, 10 trillion to the deficit. I mean, it's not a fiscal reform in any way, shape, or form. And what if you look at it, that is, if you really look through it and look at the ramifications down the road, it's dollar bearish because it's adding more and more debt to the balance sheet, and it's certainly gold and silver, uh, hard money, real money bullish, because anything that's going to undercut the dollar is going to be bullish for gold and silver. Gold and silver don't go up or down, they don't change.
Mm-hmm.
What changes the value of the currencies that they're being measured in. And truth be told, um, in a correct world, everything would be valued in grams of gold or ounces of gold or whatever. That's the way things should be weighted. And your mind would be blown if you looked at charts based in or measured in terms of gold. If you looked at real estate, if you looked at uh, the Dow Jones S&P 500, if you look at literally anything in priced in gold since the year 2000, it's literally been very poor performance because gold has gone higher, which means gold gold hasn't changed. What's happened is the dollar has gone lower and lower and lower. And if you look at any countries that have blown their currency up, where their currency got completely thrown out the window and had little to no value left, their stock markets within a month or 2 months after collapsing, they start going straight up. And what happens generally is the stock markets end up with about half the purchasing power of what they had, but they're at all-time highs in those currencies. Now, if you looked at those stock markets, and like I mentioned with the charts, if you
Mm-hmm.
look at stock markets in gold terms, they go down. But the point I'm trying to make is the destruction of uh, the currency masks the destruction of purchasing power on stocks, real estate, certainly, certainly bonds.
Yeah, absolutely. And I'm glad you brought that up, Bill, before my next question, because I was watching this morning podcast with, I'm sure you know, Mike Maloney, and he was talking about, with respect to gold, a lot of people are fooled by percentages instead of amounts. I think there's a delineation between the two. And so I think a lot of people get thrown off they're thinking, oh, I'm going to go back to dollars and sell my gold because they don't believe gold will go any higher. And they think they've reached their apex, but I think they're going to hopefully find they've been mistaken about that, because as this old system tanks, it's just going to continue to bring in and usher in the importance of precious metals and other things tied to it, to your point. Basel III regulations, sorry, go ahead.
I think, and I didn't see that, so I can't really comment too much on it, but the way you described it, I think Mike Maloney is missing the point.
Okay.
Uh, when he's talking about percentages and value, when all is said and done, in my opinion, what's going to happen is people are going to count their net worth in ounces, whether it be ounces of gold or ounces of silver or the equivalent. In other words, you might have a ton of real estate, you might have a ton of dollars, a ton of this, a ton of that, and it's only 73 ounces of gold or what, pick a number, whatever a number is. The point I'm trying to get at is people are going to count their net worth in ounces as opposed to in dollars or euros or yen or what have you.
So another way I look at that, Bill, is that maybe it's perception versus reality. People don't have as much wealth as they think they have, is what I'm hearing you say.
Correct.
Which is going to be part of the eye opener as we shift systems, to your point earlier. So thank you for making that distinction. As you know, Basel III took effect July 1st, particularly the reclassification of physical gold as, a tier one asset. You've talked about that before. It's expected to significantly impact the gold market. To me, because gold is basically on the same level as the US Treasury securities now, it makes owning gold far superior because it's a physical, tangible, hard asset. What are your thoughts on that? And do you foresee a record gold buying continuity as well as silver in the future?
As I understand it, John, Basel III was supposed to go into effect July 1st. And because the American banks could not qualify, it's been postponed, I think, into the first half of 2027. So I think that's been postponed. Now, yes, gold is considered a tier one asset, but the Basel banking rules that were supposed to take effect worldwide, that's not happened. That was postponed. I understand it.
Okay, that's interesting. I'll have to look into that. We'll have to see what kind of effect that has, or if any, with them continuing to change the system. It may not matter for that part, but it'd be interesting. Maybe they'll do it after the fact, to your point. Um, with the inevitability of Powell being dumped, I think, or ultimately to lower rates, maybe 1% or even less. And we talked about Judy Shelton. Do you think? I guess the question is, do you think when they replace him, do you think the rates will matter at that point, or is the Fed basically just going to be baked into the Treasury?
The Fed is already, you used the term baked into the Treasury. I think that happened, what, 4 or 5 years
5 years ago? Yeah.
So basically, the Fed and the Treasury are the same. They're not the same entity, but they're under the same warehouse. They're under the same roof.
Yeah.
And people need to understand, the Federal Reserve never was federal. So I guess now, technically, it is federal because it's under the umbrella of the Treasury. But the danger is that you've got a right pocket and a left pocket, and you can the right pocket, the Treasury needs to borrow, and the left pocket will automatically buy up any and all debt that's issued. So the real danger is that you put these two together, and it's a monetization fiasco.
Yeah, 100%. So I guess another sub question. Sorry?
It's not real capital. It's not real capital. What the Federal Reserve creating dollars, that's not real capital. I mean, they're creating something from nothing. And if it's free to create something, how much is it worth? How much can you sell it for? If it costs you nothing to make it, what's the value? And that's the point I'm trying to make with the Federal Reserve is they create all these dollars, but are they actually creating value? Or are they just adding supply to an already oversupplied currency market that truly has an intrinsic value of zero?
Absolutely, because like you said, it didn't cost anything to make. I mean, banks make no products or services. It's all artificial debt based, as you know. They just, it's like no taxation without representation. Everything we were supposed to learn in school constitutionally goes against the precepts of our forefathers. Um, but I did want to ask you about this, Bill, as a secondary question. Wouldn't lower interest rates historically send precious metals soaring? And don't you find it unique that crude oil is going up during the summer when traditionally price, excuse me, going down when traditionally prices go up in the summertime?
Yeah, see, you're looking at history that's getting further and further away from August 15th, 1971. That's when we truly left the gold standard. And yes, historically, high interest rates are a competitor to gold that pays no interest, and low interest rates supposedly are friendly uh, to gold and silver because they don't pay any interest. And if your competition is a 1 or a 2% CD, it's not really competition. The problem that I see, you're looking back at history and saying, well, this happened and then thus this happened. The problem is we're at we're at the final end times of this fiat experiment.
Mm-hmm.
And you've got the issuer of the the currency, the global world's reserve currency, the dollar, in a precarious financial position. So
Mm-hmm.
what I'm getting at is currently there's like no risk premium to owning treasuries. I mean, if a 10-year treasury, what, 4.25, 4.35, whatever it is,
Mm-hmm.
uh, if there was a premium that was placed upon that because there's the danger of the fiscal danger that money's going to have to be printed just to pay interest alone. If there was a risk premium on it, rates would be significantly higher. Uh, but would gold be lower under that scenario? In other words, if it looks like the treasury's running into a problem, there's a run of selling treasuries worldwide and interest rates are going up, is that going to retard gold from going up? Will gold owners really be afraid that, oh my gosh, I'm going to lose out on, an additional 3%, 5%, whatever, in interest from dollars, whereas I own the gold because I think the issuer itself of dollars is going to go bankrupt.
Yeah. Yeah. I mean, it's ladling calculation upon comedy because you're talking about something tangible versus something that's theoretical. And you're right, the dollar's clearly losing its hegemony status across the world, which actually brings me into one of my last questions for you today that I don't think, Bill, people are talking about quite enough. And that is, there's a lot of talk about the trade deals, and he extenuated the timeline from July, I think tomorrow to August 1st to give more countries, the ability to come on before he brings in tariffs, and he's listed a number of countries who are not coincidentally aligning themselves with BRICS. We've talked about this before, but I don't think this is. I think it's just a chess move for him to create reciprocal trade deals, as he did with Argentina and Javier Milei. So, couldn't he conceivably be just using that as bait to make these trade deals to get at the assets? Whereas he's still going to allow BRICS to pull away from the dollar hegemony and create their own thing, which they have already been doing since last year with the unit, so that it's sort of a win-win proposition.
Yeah, I'm sure that he's using it as leverage or bait or whatever you want to call it.
Mm-hmm.
The problem is there's now, I think, half the world is talking about joining the BRICS. Uh, this is not 1950 or 1960, where the United States was the biggest, baddest military, economic, financial power in the world. Uh, I mean, it's questionable whether we're the strongest militarily anymore. You look at the leverage in the system, financially, we're standing on a knife's edge. Um, from a real economy standpoint, our economy has been gutted. I mean, look at manufacturing over the last 20, 30, 40 years.
Yep.
So we're no longer the biggest, baddest bully on the block.
Right.
If we were, then, Trump's actions, uh, would not appear to me, to be bluffing, but it appears to me as one giant bluff. And the
Yeah.
problem is there's too many countries, there's too much of the world that already wants to distance themselves from the US and from the dollar. And they want to distance themselves from the dollar because, people, if you and I know there's a problem, the smartest people in all these other countries, they know there's a problem.
Mhm.
Uh, and they've also seen the United States make deal after deal after deal for what, the last 30 plus years, and we don't adhere to them. I mean, we make a deal and we break the deal.
Absolutely.
It's
And
a double.
yeah, it's a double-edged sword. And, I think you're right because, all these countries have plenty of reserves. You got Zimbabwe with 40% of the world's gold reserves all by themselves, and that's just one nation. Okay. Well, thank you for that. So yeah, but it's clear to me that the Operation Sandman is at least has 100 nations. And I think at the end of the day, it's going to be infinitely more than that as people lose confidence in the old Fed dollar. They're going to continue to pull away. I don't think that President Trump can't stop it or necessarily wants to because it's part of, as you said, gutting the old system, which is kind of inevitable at this point.
And he wants a weaker dollar. I mean, he's said
Yeah.
he wants
Yeah.
a weaker dollar. And obviously, his actions with tariffs, he wants a weaker dollar.
Right.
He wants a balanced trade deficit.
Right.
And the easiest way to do that is a weaker dollar. So, I mean,
Yeah.
you've got the president who wants a weaker dollar. Uh, if you knew nothing else at all, you'd want to be out of dollars and into gold or silver just with that little bit of information alone.
Absolutely. And you're right, because in weakening the dollar, you're leveling the playing field for other countries to do well and separate themselves, which falls into BRICS. So it's clear to see that to your point. One last question for today, Bill. You had talked about this months ago about you're more in the financial advisor realm than I am, so that's why I ask you this. But I believe you said something to the effect of if you had to make a recommendation to people in terms of precious metals, at least have $1,000 of junk silver per household per person. Is that still the baseline, or have you adjusted that?
Absolutely. Well, I've said if you can afford to have one bag of junk that's 1,000 faith,
Mhm.
715 ounces, if you can have one bag of junk for each person in your household, you should financially be able to get through whatever they throw at you.
Okay. Just wanted to see if that's, remained a constant or changed a little bit just for posterity because we haven't brought it up in a while. Well, I think that gives us a good idea for the people of which direction to go and where we're headed. Bill, as we close up the podcast, any last thoughts you have for the audience today?
Um, I mean, I've been finishing all my interviews with just do the best you can. Nobody knows exactly what's going to happen. Uh, you can have a pretty good idea, just by putting the pieces together that the previous system is going to collapse. And your best bet is to get yourself outside of the system the best you can.
Mhm. And if people want to contact you on your website or your email to consult you for precious metals, how can they do that?
Yeah, go to my website, billholter.com. There is a contact button there. Or if you want to contact me directly through my business email, it's bholter at proton.me.
Yep. And as you folks remember, Bill is closely affiliated with the Clearinghouse, with one of our main sponsors, Miles Franklin, for precious metals. So he is definitely a trusted advocate, can help you at your direction of need. Bill Holter, thanks for joining us on the podcast. As always, we appreciate it. We've had a great fourth, and we look forward to seeing you again shortly.
Thank you, John.
Take care.